Hi guys, my name is Madhuri Shah and I am the owner of Trust Planet Accounting Solutions. Today we are going to talk about the One Big Beautiful Bill Act which was signed and enacted on 4th of July by Mr. Trump in the US. The OBBBA is a sweeping bipartisan bill covering infrastructure, social benefits, and what we are going to talk about today, the taxes. Whether you have a family, are a small business owner, or a high income earner, these points will matter to you, so stay tuned.
President Donald Trump's comprehensive budget bill has become law on 4th of July 2025 after narrowly passing the House. Despite internal GOP disputes over social programs and spending, the Republicans ultimately united to support it. The Congressional Budget Office estimates it could add $3.3 trillion dollars to the deficit and leave millions of people without the health coverage. Now, let's take a deeper dive in some of the updates that it has brought in the tax area. The OBBBA is officially law as of 4th July 2025. So let's walk through what this means for you as an individual taxpayer and how it compares to the current tax rules. The first one is the tax rates and the brackets. So right now, the Tax Cuts and Jobs Act from 2017 was set to expire after 2025. But with the OBBBA, those lower tax rates are now permanent and they'll continue to be adjusted annually for inflation. The SALT deduction cap. So, under the current law, the state and local tax deduction is capped at $10,000 for those claiming the itemized deduction. This cap jumps to $40,000 from 2025 to 2029 with a phase down for high earners after that. The tip income deduction and the overtime income deduction. So OBBBA introduces something new. Tips are currently deductible up to $25,000 immediately per return through 2028 with income based phase outs. And for overtime, this is partially deductible, so up to 12,500 for singles and 25,000 for joint filers. The overtime income is completely tax free up to these limits. Now they have increased certain limits for the standard deduction, making it from 15,000 to 15,750 for individuals and from 30 to 31,500 for married filing jointly. And then there's an also increase for additional deduction of $6,000 for the senior citizens. They have increased the child tax credit from $2,000 to 2,200 per child permanently. For the estate and gift tax exemption, this is currently set at 13.61 million for 2024, but the OBBBA raises the bar. The exemption increases to 15 million and will rise with the inflation. Whether you are a working parent, a retiree, or earning extra through tips and overtime, OBBBA introduces meaningful deductions and relief, but many benefits phase out for high income earners. Now, let's break down the key changes for businesses under the new passed OBBBA. So, the first one is a pass through deduction under Section 199A. So, under the current law passed by the TCJA, there is a 20% pass through deduction which was set to expire after 2025. But under OBBBA, it's made permanent with expanded eligibility for certain businesses. Next is the bonus depreciation. So right now bonus depreciation is phasing down to just 40% in 2025, but with OBBBA we are back to 100% bonus depreciation permanently. That's huge for businesses investing in equipment or machinery. Simultaneously, there's also an update on the Section 179 depreciation expensing. For 2024, the expensing limit was 1.22 million with a phase out beginning at 3.04 million. OBBBA significantly boosts that. The limit rises to 2.5 million with a 4 million phase out threshold. So this is big. The next one is the research and development deduction. So currently the businesses must amortize all their R&D expenses over 5 years. So this change was brought a couple of years ago, and then there were debates of withdrawing it back to expensing out or not. Finally, OBBBA changes that the domestic R&D expenses can now be fully expensed immediately, and even better, some past capitalized cost may qualify for acceleration under the new section 174A. The next one is the production real property incentives. Today, buildings and production facilities are typically depreciated over 39 years. OBBBA introduces a game changer, which is 100% expensing for certain real properties used in manufacturing or production. Now, the business loss carry forwards. Previously, excess business losses were converted to NOLs with limitations, but now, under OBBBA, this provision is made permanent and even expanded to include estates and trust. So, if you run a growing business, especially in the manufacturing, tech, or service industries, OBBBA could offer major tax planning opportunities.
So there you have it, a fresh tax batch baked right out of the oven of one big beautiful bill tax act. I will be talking